Most taxpayers still believe they can deal with HMRC once a year and forget about it until the next deadline. That era ends in April 2026. Whether you're a landlord, a sole trader, or a small business owner, the rules you've relied on for years are being dismantled and quarterly digital reporting is taking their place. This episode cuts through the noise, no buzzwords, no HMRC marketing language, just the essential truth. Who's being pulled into MTD first? What digital records actually mean in practice? And why ignoring this shift will cause more work, more stress, and potentially more penalties. If you want to stay ahead of what's coming, this is where you start. From April 2026, UK taxpayers face a major change. No more one annual self-assessment return. Instead, digital reporting with quarterly updates and a final declaration is mandatory. But why is HMRC making this shift and who would be affected first? Making Tax Digital for Income Tax or mtditsa is HMRC's digital transformation. Its goal is simple: reduce errors, improve compliance, and modernize tax administration. Today, we explain the timeline, threshold, and digital requirements for the taxpayer. HMRC estimates around 9 billion is lost yearly due to taxpayer errors. Digital reporting reduces mistakes, improves compliance, and speeds up processing. It also allows HMRC to provide more accurate guidance to taxpayers. MTD is digital by default. Taxpayers must keep digital records and use mtd-compatible software. If software is not compatible, bridging software is required. The goal: replace manual ledger with a fully digital system. Not all taxpayers enter MTD at once. From April 6, 2026, those with more than £50,000 gross business or property income must comply, around 780,000 people. From April 6, 2027, the threshold drops to £30,000, adding roughly 970,000 more taxpayers. Under MTD, all income and expenses must be recorded digitally. Sales, purchases, and other financial information must be maintained in compatible software. Spreadsheets or paper ledgers alone will not meet the rules. MTD replaces the annual SA 100 with quarterly updates and a final declaration. Taxpayers report income and expenses every 3 months, then a final declaration at a year-end. This helps HMRC track liabilities and prevents large surprises. HMRC introduced simplification in Autumn Statement 2023. These include practical guidelines, software support, and simplified record keeping for small businesses. To summarize, mtditsa reduces errors, improves compliance, and modernizes tax administration. April 2026 brings high-income taxpayers first, then lower threshold in 2027. Digital records, quarterly updates, and a final declaration replaces the old SA 100. HMRC simplification support the adoption. Before you move on, take a moment to be honest with yourself. Knowing what MTD is doesn't help you until you know whether you're actually caught by it. And most taxpayers have no idea how the threshold, income rules, or exemption really work, which is exactly why so many people make wrong assumptions. I'll walk you through the threshold test, the income categories HMRC counts, who gets excluded, and how digital exemptions requests actually work. If you want to avoid surprises in 2026, that's the episode you cannot skip.